Today's guest is known as a best-selling author, successful real estate investor, coach, inspiring speaker, and he's a former federal prisoner. That last title is one that gives him a unique perspective, but also gives us a cautionary tale of things you have to avoid if you want to be into the apartment investing game. Mike Morawski has a great story of redemption, talking about his time building up a portfolio, having it all taken away from him and spending 10 years in a federal prison before bouncing back and building up his own portfolio, working with other investors again. If you want to learn from his mistakes, you don't want to miss today's conversation right here on Multifamily Insights. When you think you found a great deal, asking the right questions could be the difference in finding a stud or a dud. Listen, we've put together a new guide to help you out. It's called 7 Questions You Must Ask Before Investing in Apartments. Now, in this guide, you're going to learn how to uncover red flags, quickly identify underwriting risk, vet sponsors and team members, and confirm key assumptions. Now, this is a guide that's going to help you be a better investor, whether you're an active investor or you're a passive investor looking to partner with other operators. Asking better questions is the key to identifying great opportunities. So download this free guide. Go to our website, casmoncapital.com/7 questions. That's the number 7 questions. And you can access this free guide today. To make it easy on you, though, we've put a link in our show notes. So you go to the show notes, you can click that link and access the guide right now. This guide's going to help you make better investment choices, asking the right questions to build your portfolio. So be sure to download it today. Mike Morawski is a 30-year real estate investment veteran. Now, he has controlled over $450 million in real estate transactions. Mike is an entrepreneur, author, real estate trainer, public speaker, personal coach, and the chief investment officer of a multifamily hedge fund. Let's welcome to the show, Mike Morawski.
Hey, John, how you doing?
Mike, I am doing great. It's great to get you back on the show. I went over your bio at a very, very high level. Why don't you take 2 minutes and fill in some of those gaps?
Yeah. Hey, first, I just want to say I appreciate you and having me back on. You and I over the last few years have built a good relationship. And, I think relationships in this business are critically important, in any environment, whether, things are good or things are bad. You need friendships and you need people around you that you can lean into and ask questions and learn from. And you've been one of those people in my life, and I appreciate you for that. So thanks.
Thanks, Mike. Thank you.
Yeah. My history, geez, John, I've been in the business 30 years, some of which I probably have forgotten about, or would like to have forgotten about. But I started out at a general contracting business, outside Chicago in the northwest suburbs, and did that for a number of years, burned out as an entrepreneur, doing everything in that business, and went into residential real estate sales. And I built a team selling about 125 houses a year. We did that consecutively for about 12 years. And in 2005, I went in the apartment business. And, I didn't just wake up one morning, John, and go in the apartment business. It was something I had thought about. I really feel like I manifested it in my life, because when I was in the construction business, I did a lot of work for a couple of large syndicators, Equity Residential, Sam Zell's old company, and Inland Real Estate, did a lot of work on their apartments. And I understood the model. I understood that you raise private capital, you marry it with a great real estate deal, you stay in the middle, and as long as everything goes well, everybody makes money. Went into business 2005, syndicated my first apartment deal, not knowing anything and not knowing how to raise capital or how to do due diligence or pre-evaluations on deals or markets. And over the next 30 months, I scaled a $100 million company. We bought 4,000 apartments in 5 markets, and had a property management company we built managing 7,500 units. And our company was valued at about $100 million. 2008 rolled around. The world went to hell in a handbasket, and we started to come off the rails. And by 2010, we were totally going sideways, and had to make some decisions. I had 38 different companies at the time, and probably should have just let a dozen of those companies go to foreclosure and a handful of investors get hurt. But John, I'm the oldest born. I'm the hero. I don't, I don't want to, have to give bad news to anybody. So I tried to save my company, and I started to move money from one company to another, from profitable to non-profitable companies. And my accountant and my attorney both said it was okay to do that, just leave a paper trail. And we all thought it was a recession at the time. And, typical recession lasts 17 or 18 months, 10 or 12% correction. The markets bounce back. In a couple of years, you forget it ever happened. Well, this thing lasted 7 or 8 years with a 47% correction in the market. Was a hard storm to weather. So I tried moving money back and forth, which, legally was fine according to my accountant and my attorney. But what I did was I didn't tell my investors. So for non-disclosure, I wound up being charged on wire fraud and mail fraud charges, and actually got sentenced to 10 years in federal prison. So in 2013, just got wiped out, lost everything, went to federal prison for 8 years. And, I always tell people, John, I say I never flew private. I didn't have a boat. I didn't have a big car or a fancy house. I was a neighborhood baseball coach. I was home every night for dinner. And I got ripped from that to live in a 12 by 12 room with three men I didn't know, nor did I like, wondering what the hell happened in my life. And that's what happened, right? And I always say, it's not what happened to us, but it's what happened for us, because I reinvented myself. While I was gone, I wrote a couple of books. I wrote an ethics course. I taught real estate investing, property management, and ethics in prison for 6 years. How ironic, a federal inmate teaching ethics in federal prison. I was on an outreach program. I went in the community. I told my story to small business owners and college students. And I wound up meeting a professor from the University of Minnesota. He and I co-authored a paper together that we had published in the Business Journal of Ethics. It gets taught at the collegiate level today for forensic accounting and sales and marketing classes. And I also went to college. I got a bachelor's degree in theology and just really reinvented myself. Came home and, the week they closed the world down for the pandemic. So I went from that prison into your prison and, went in the coaching and training business. And I teach people not to make the mistakes I made. So I really feel like, there were 5 lessons I learned, John. And one was, don't grow too fast. I think as an entrepreneur, we all have this desire to grow fast. But remember, this is a marathon, not a sprint. You got time. And I just tried to force it too much. The second thing was we were over leveraged. I owned $60 million worth of real estate at 85% loan to value. When, I teach people today in my coaching program that you should be at 65% LTV. And then I was undercapitalized. As a business owner, every week you're wondering how you're going to make payroll. I had over 100 employees working for me, wondering, where the next stream of revenue was going to come from. And then I didn't pay attention to details. So, today I believe that deals are made and broken at the asset management level. And if you're not watching like a hawk, your deals, your numbers, your property management people, you're going to have challenges. And so that was one of the mistakes I made previously. And then the fifth mistake was I didn't pay attention or listen to people around me who said, hey, I don't like what I see, what's going on. I don't like the people around you. You need to take a step back and take a look. And I didn't pay attention to those warning signs. But, but today I'm home. I came home. I went in the coaching and training business, started raising capital and syndicating deals again in 2021. and our securities attorney got me approved by the SEC to go back and raise capital and be an issuer of securities again. And I feel like my life's come full circle. So
Yeah, Mike, I appreciate you, being open and honest with your story and sharing some insights that I think could help a lot of people. A couple of things you talked about, right? Just your journey, building up your portfolio, working with some big names in the real estate landscape, building out your own business at one point, having, over 100 employees that you were overseeing, building up $100 million portfolio. But one of the challenges that you started to face, right, as the economy went down, business went down as well. Proverbially rob Peter to pay Paul. And, through the accounting of that, without disclosing that to your investors, you got in trouble, spent some time in federal prison based on these, these actions, and really had to go through a process to reinvent yourself. And through that reinvention, you kind of found your way. I chuckled when I did write a note here when you talked about being a federal inmate teaching ethics. There's definitely an oxymoron there,
right.
but it also goes to show that, what you've done and mistakes that we've made shouldn't define who you are for the rest of your life. And I think that's really important for us to take away. Um, the last thing, though, you mentioned those 5 key lessons as you reflect
Yeah.
back. One is having a long-term outlook. The second is be careful with how much leverage you use. You don't want to be over leveraged. The second is third is you don't want to be undercapitalized. Fourth, you want to pay attention to the details. Make sure you're paying attention to those little things. And then last, I wrote down, watch the company you keep. If you're around the wrong people, it's going to rub off on you in some capacity. You might have a great moral compass, but if the people around you are, either not paying attention or putting you in situations, that's just not going to end well at some point. So making sure you follow kind of those 5 life lessons based on your experiences. Mike, there are some people listening who are in situations today that may mimic some of what you described early in 2007, 2008. Deals aren't working as well, a little less cash flow going around, not able to make distributions to investors. What would you say to them as they try to navigate maybe some rocky investment situations?
Yeah. One thing I would say is get advice, talk to people who are smarter than you are, talk to people maybe that have made some mistakes in the past, but don't just stop there. Then, take action. Don't, I think a lot of times we have these decisions to make, right? I can go to the right or I can go to the left. It's the proverbial fork in the road. And a lot of times we still choose that wrong path. John, I tell my story a lot. I've been on 40 public stages in the last couple of years. I've been on 300 plus podcasts, and I tell my story because I want people to know how important it is not to make those mistakes. And invariably, John, every time I'm on a stage, somebody walks up to me and says, my brother just went to prison. My uncle's in prison. My best friend just lost his company and is facing prison, because they were going to make a choice or a decision that was going to change the destiny of their life. And I think that we have to be careful in some of the decisions we made. Even me, John, I went and got good data from my attorney and my accountant. They said it's okay to do that. Just leave a paper trail. But nobody said, hey, you better tell your investors, right? So make sure you get good quality counsel, and that you do what that quality counsel tells you to do or what to avoid. Yeah, I just think it's important.
Yeah, Mike, I appreciate that. And that's great too, right? Like it's one thing to not know, but the fact of the matter is when you are in this business, like no one cares that you don't know, right? Like you
Yeah.
didn't know, oh, I just needed to disclose it. Well, no one cares that you didn't know that you were supposed to disclose it. That's why you get the attorneys, that's why you get the CPAs, and you're hoping that they are knowledgeable enough to give you the right intel. And on top of that, it's on you to take accountability to follow up and actually take those actions. But again, we got to make sure we're surrounding ourselves with the right people so that we're getting the right feedback in the right direction. Mike, I want to transition just a little bit. Oh, do you have a comment there?
Yeah, let me just
Yeah,
make a quick
please.
comment. You know, it's really important to understand that ignorance is not a defense. So you can't show up in court and say I didn't know, right? Ignorance is not a defense. And we're in an industry where we're taking someone else's money. And John, if you loan me $1, I'm held at a much higher transparency than anybody else, right? I have to account for that, and I have to treat that respectfully and be a good steward of that investor's dollars that they're putting into my deals. And I think that's the biggest lesson I learned today is to be a better steward and to treat my investors you know, fairly, have a higher level of transparency, and not just surface level, but a deeper level of transparency because people need to know. And even if you're in trouble, even if a deal's going sideways, if you can come to your investors and say, "Hey, look, here's what's going on, but here's what we're doing," and you're being transparent about it, they're gonna, they're gonna understand, right? So,
No, great points there, Mike. Let's talk about what you've been up to, right? You mentioned some of the things you've written while you're in prison, coming out of it. You've written out 3 books, right? The first being
yeah.
Exit Plan. The second book was Winning Strategies for Property Management. But you now have your third book, which I'm excited to learn a little bit more about. Talk to us about that book.
Yeah, my third book, Multifamily Investment Secrets, your explosive guide to wealth in multifamily real estate investing. Amazon bestseller, 7 times domestically, 3 times internationally. Super excited about this book. John, my passion behind it was to teach people how to do multifamily, right? Both fundamentally and creatively. And I think there's 2 sides to the aisle. I talk in this book a lot about a 450 unit deal that we did creative financing with. And, the deal went really well. But I tell a lot of stories of other clients and people I've worked with over the years in the book also about strategies, things that they did, conversations we had, and just how to do the business. You know, John, people want to get into multifamily investing business, and there's a lot of moving parts, and it's not a business that we do by ourselves. You mentioned early, our relationship. You got to have good relationships with people, and you build your business by team efforts today. And so, I talk a lot about that in the book as well. So
Yeah,
that
you talked about relationships and what it takes to succeed in investing for someone looking to unlock some of those secrets. Give us a taste. Like what's one secret that you talk about in the book that maybe your average investor doesn't think about?
Yeah, so let me just real quick, I don't think your average investor thinks that you can do creative financing in large multifamily deals, right? And I've done single family, I've done 4 units, I've done 60 units, I've done 400 units, creatively. And we structured a deal in this book, and it came down to the fact that the seller became a don't wanter, right? I don't want to own this real estate anymore. He had just refinanced the deal, pulled $2 million in cash out, went back home, found out his father had stage 4 cancer, and didn't want to do anything but spend the last days with his dad. So he wanted to unload this, didn't want any responsibilities. We were able to go in and negotiate on at the time was a 13 cap, was like a $15 million deal for 450 units. And just a real quick side note on that, I know the guy who bought the deal 2 years ago, who bought that same property at a 4 cap, and I paid 15 million. He paid 60. So, big difference, right? So it goes to the point, hold on to your real estate. It's gonna go up in value. So, but we bought that. We assumed the first mortgage of 12.5 million. The seller, held a second for 2.5 million, and we ran and operated that property. And so, those deals are out there, and they're out there today in this environment if you look for them. And I help people structure creative deals a lot, and it's interesting what you can find out there just by simply asking the seller, "Hey, are you willing to participate in this?" And find out where the seller's pain is, or find out how you can help the seller a little bit more than what they're anticipating.
What I'm hearing you say is, you can do creative deals on larger commercial real estate. You just have to understand the problem you're solving. And the example you gave, that owner had a life situation, which, you know, that happens to everybody, right? In this case, you talked about his father having stage 4 cancer, wanted to spend more time there. I think a lot of investors do not believe that you can get creative in commercial real estate because it's just numbers, right? It's just these are professional investors. But to the point you're saying is that life hits all of us. And there are going to be times where the partnership dissolutions or capital needs or other situations where someone is looking to liquidate or someone is looking to solve a different problem. And if you could come in with a creative eye, you could create value there. Now, I know in the last few years, that has been really hard to come by,
Yeah.
mainly because you could just list it with a broker and get a great number.
Right.
That has started to shift a little bit. Talk to us more about kind of the current market dynamics and whether or not you believe that makes it easier to do creative deals or more challenging to do creative deals.
Well, short answer is it makes it easier, but here's why. And John, there's no geniuses in this business. There's only market cycles. And it's where we're at in the market cycle that dictates your ability to be able to put a good deal together, or how good the deal is that you're putting together. And they say that the markets go up for 8 to 16 years, they come down for 8 to 16 years, and some of those cycles are shorter. I believe moving forward in time here that we're going to see shorter, quicker market cycles. And if you look at where we're at today, and I'm a firm believer, watch the stock market because that'll dictate kind of where we're at. But over the last 10 days or so, we've seen, a dip in the, U.S. stock market. It's lost some value. We saw a dip in the Chinese stock market, lost some value. The Feds have come out, said they're going to lower interest rates, 5 times this year. That starts to show us that we're either at the bottom or coming to the bottom of that cycle, right? And now what happens is we're start to go up. And if you can catch that upswing in the new market and have the wind at your back, that next bull run, you're going to do really well. I think we're entering a time in history that we're going to see the biggest shift in wealth this country's seen in years. So, the question becomes, are you somebody who's going to take advantage of that, or are you going to let it go by? Because I know, John, you and I have probably said either to other people or to ourselves, man, I wish I would have caught that the last time that happened, right? Because I have a very good friend who's in the business, and these guys made hundreds of millions of dollars in the last cycle. And it's like, man, I wish I would have been here and been able to do that, but I wasn't. And so, can we catch this next one? And if you're a real estate investor looking to get into business, this is a time. This is a time to get started and get the education you need, start taking the action you need. Or if you're just a passive investor, this is the time to start investing, because you're going to catch this thing and you're going to do really well. I'm not saying to be flagrant, but I am saying to be cautious in your entry, but you're going to do well.
Yeah, listen, I think it's a great point, right? You and I see the market similarly, where there's going to be great opportunities, and those folks who are active, who are paying attention, even simple stuff. There used to be a time where you would reach out to a broker, And if you didn't have the highest and best offer, they didn't even respond to you, right? Like, and this is
Yeah.
if you're a credible investor. They're like, yeah, okay, I got another guy that's going to pay $1 million more. It's like, wow. That's not the case today. Now they're reaching out to say, hey, man, do you see this deal? Do you want to put in an offer? It's like, oh, I didn't even know you had my number because I felt like every time I called,
Yeah.
you didn't answer, right? So that dynamic is shifting. You're starting to see that there is more opportunities for those buyers and investors. And if you have a longer term view, then it makes it more flexible. And when you talk about cycles, the goal here is just to be able to sell when it makes sense. That's going to be different for every investor. But if you can hold on to a cash flowing asset and sell it when it makes sense to sell it, you're going to be fine. The challenge people face is whether it's through bridge loans or other temporary sources, you get an asset and you don't control when you need to sell it because of either the loan terms or other situations. That's where it can be challenging. But if you have that control, you give yourself the flexibility on the exit. Mike, you were starting to talk about just like investor sentiment and not being flagrant and just making sure that they're taking advantage of the market cycle. I know that you put together kind of a questionnaire to help people gauge whatever their sentiment is when it comes to investing. Do you want to talk about that a little bit and how people can get in touch with that?
Yeah. So I put a 10 question risk tolerance profile together for passive investors. If you're somebody who likes to invest in multifamily or industrial real estate, whatever asset class you like to invest in, it really doesn't matter. Um, I have a 10 question risk tolerance test that talks about who you are and where you're at in your investing strategy, your mindset, what you want to accomplish over the next 3 years, 5 years, 10 years. And it's a 3-minute test or quiz, I should say, a questionnaire, and you'll get a report back that says you fall into one of these three categories as an investor. But you can go take that test, just text the word investor to 224-269-6700 and just text the word investor, and the test will come right up on your phone. Just answer the questions. 30 seconds, you'll get a report back, and you'll know, is this for you or not? Right? Because it's not for everybody, John. And, there are those people that disqualify themselves because they're afraid of taking a chance.
Yeah, you can check that out. We're going to put a link to that phone number in the show notes. You can make that text if you want to check out that questionnaire to do that personality trait and just understand kind of your risk tolerance as an investor. We're going to get ready to go to a round of insights. But before we do, I want to remind you about that 7 questions guide. You can check it out on our website, casmoncapital.com. That is the 7 questions you must ask before investing in apartments. They say you're the average of the 5 people you spend the most time with. So if you want to grow as a multifamily investor, you have to spend more time with other multifamily investors. And an easy way to do that is to join our apartment investing mastermind group today. Just go to casmoncapital.com and click on the mastermind button. Now, as a part of this group, you'll get access to expert trainings, group coaching calls, industry news and updates, as well as all of our webinars and workshops, including our 3-hour workshop on raising capital. Again, if you want to be around other multifamily investors that can help you scale your portfolio today and grow your network, make sure you're a part of the Apartment Investing Mastermind. Just go to casmoncapital.com and click on the Mastermind button today. Mike, give me a failure or an apparent failure that set you up for later success.
Well, John, of course, I talked about it at the beginning of the show, but I don't look at it as a failure, John. Yeah, I lost everything, and, I have some regrets. I regret the hurt that my investors had. And bigger than that, I regret the disconnection with my children. I have a couple of kids that don't talk to me today, but I regret that. But here's what I know. I reinvented myself. I have a relationship with the Lord today that I had never had before. And, I'm a different person, right? Humbly, spiritually. And, that's the success in my life today. I'm living the life today that I've always wanted to live. And it's not a financial merit badge, but it's a spiritual, emotional, physical merit badge.
Give me a digital or mobile resource you recommend for our listeners.
Um, or for investing, John, or give me a little help with that.
For multifamily investing, anything that can help them as entrepreneurs, business owners.
Yeah. So, listen, I'm going to tout my underwriting, right? My underwriting tool. I have an institutional grade underwriting tool that we use when we underwrite, and it's very sensitive. And when you do a stress test on a deal and you ask enough what if questions, it gives you some answers. And I always say the math doesn't lie. And if you really do your underwriting conservatively, and not just say I'm conservative, but do it conservatively, like maybe no rent growth year one, maybe, instead of trying to get 5% rent growth year after year, you're only getting 2%, it will tell you the truth. And it's a tool that allows you to manipulate it a little bit. So I have to tout that because I think that has saved me and saved some of my coaching clients from making wrong choices and decisions over the last 12, 18 months.
Give me the book you've recommended or gifted the most in the last year, besides your own.
Yeah, love that. You know what? There's a book that I continually go back to right now. It's called Winning. It's by Tim Grover. Tim Grover was the personal coach for Michael Jackson, LeBron James, Kobe Bryant. He was the mindset and did some physical coaching with them as well. It's called Winning. But if you need to have your ass kicked, this is a book to read, because just this, he jumps off the pages at you, and I go back to it over and over and over again.
Yeah, Winning is a great book. You said Michael Jackson. I know you meant Michael Jordan, but I just want to clarify that for our listeners. If he coached Michael Jackson too, that's incredible, right? Yeah, but a great book. Tim Grover, check that out, Winning. Give me a daily habit that helps you stay focused on your goals.
Meditation. My meditation time has really continued to help me be intentional about my day, my clarity. I'm a huge Joe Dispenza fan, and follow Joe Dispenza and the conversations around affirmations, the conversations around mindset, how the brain works, meditation, visualization. And that time in the morning, my morning time is very valuable to me. I pray, I meditate, I go to the gym and work out, and then I start my day with intention, right? So
there you go. All right, give me your number one insight for bouncing back from failure.
Yeah, that number one insight would be you have to do it, right? Um, I I've seen a lot of people. I was in prison with a lot of men that came home and are still have the covers pulled over their heads today. I have a good friend that I talk to, 2-3 times a week, who never wants to talk about his time in prison, and I think it's a detriment. I think that people uh, people, first of all, need to hear your story, right? They need to hear the mistakes you made and how you recovered from them, but they also want to know, and it's fair to them and fair to you to let them know. And I think that you have to share your story with people.
Love it. Well, let's go in a different location, right? Or let me say that differently. All right, let's lighten the mood a little bit, go in a different direction. We met in Chicago. I know you have since moved to Huntington Beach. I'm going to let you select if you're going to go Chicago or Huntington Beach, but give me your favorite place to grab a bite to eat.
Oh man, there's a spot here in Southern California called Joey's. It's kind of trendy, but the crab cakes are off the charts. And, the atmosphere is awesome. The service is awesome. It's a great vibe.
Joey's, it is. Well, Mike, enjoyed our conversation. I appreciate you coming on the show, being vulnerable, sharing about your troubled past, the lessons that you learned, and through that experience, and just really understanding. Hey, listen, you made the quote, and I love it. Ignorance is not a defense. As investors, we've got a responsibility to take care of our investors, to take care of our passive investors, and the folks who are entrusting us. Make sure you're surrounding yourself with the right people to help give you that guidance. Make sure you understand what it is you're supposed to be doing. And if you are facing some hardships, at a minimum, be transparent, talk to the people, and make sure that you are getting them the information that they need. On top of that, when it comes to investing, you're making sure that you're making great choices, understanding the market cycles, and identifying opportunities. You mentioned a couple resources. One of them was that investor, what'd you call it? Not a sentiment, tolerance. You talked about a couple of free resources like your investor tolerance quiz. So we'll put a link to that if folks want to text you or check that out themselves. And Mike, I just want to thank you for coming on the show again. It's been great talking to you and learn a little bit more about your story and your journey. And I hope it does help someone else with whatever they are going through. Again, for folks that want to reach out, they can go to the show notes, check out that text message, and shoot investor to the number 224-269-6700. Mike, thanks again for being a great guest. We look forward to staying in touch with you, and I hope you have a great day.
Thanks, John. I look forward to seeing you soon.